Hey, can you guys see my screen? Do let me know if you guys can hear me. Okay, great. So in this webinar, we had a post up on Indian Street Bets asking people what their basic doubts were regarding trading and investing. And so I'm just going to read them all out and try to answer as much as I can. Okay, so this is question number one. On the candle by candle replay, it's a bit easier to take a decision because we just see the closed candle. How do you handle decision making and emotions while the candle is currently an all engulfing candle, but as soon as you enter, it becomes a doji? Does it make sense to trade on a time frame larger than 1 minute, keeping this in mind? Now, first of all, I don't recommend trading on anything less than 5 minutes. If you are trading on anything less than 5 minutes, then the noise becomes really too much to handle at a time, because you can immediately have like one big red candle on a 1 minute chart, but on a larger time frame you might not even see it, which is why you'll have more of these emotional problems. The best way is to just look at the 5 minute chart and understand where you're entering the position. Your entries have to be on point. If your entries are decent, then even if the market does go against you for a bit, you will still be in the trade and it won't hit your stop loss. Now, how do you handle when the candle is currently moving? I mean, you can always wait for the candle to end, right? And plus you'll have to judge how the candle is currently moving and everything. A lot of it does come with experience, but as long as you can keep your emotions in check, you should be able to figure out what this candle is doing. It's very rare for a big candle to become a doji. So on most of your trades that shouldn't happen. Again, even if your risk management is proper, even if you get the market direction right just 50% of the time, you should make money, right? The second question is again extremely common. Is it even possible to be a full-time trader? Uh, Loads of people keep asking me this question. It is obviously very personal and differs from person to person. But according to me, it is extremely difficult to have trading as a full-time profession unless you have capital saved up already and have the experience. So if you just have the capital but don't have at least 3 to 5 years in the market, then it'll be really hard to consistently make money. Because when you do become a full-time trader, you depend on this for your bread and butter. So it just adds on to all the emotional stress. So as the first question says, your mind does play tricks on you when you trade. So emotionally and mentally, you have to be pretty strong. How many accounts must a guy blow out? I mean, as few as possible. But yeah, as I've mentioned, I've blown accounts when I started off. So how many years does it take? It depends on person to person. I know traders who've been successful from their first month, but for me, it took me around 6 months to be profitable. But yeah, it depends on person to person. It depends on how much time and effort you put into trading. Uh, One of my major issues not being able to make a decision while the candle is still moving about. If I wait for the candle to close, it's too late. If I enter as soon, it might be a fake out. This is a problem I see too many people face, and they always mess this up. So, for example, the market is in a range, Nifty is hovering around 11,000, and you expect a big up move. So you want to go long. However, as soon as you see like one big red green candle, everybody will try to hop on. And since limit orders won't be executed, since the market is moving so fast, they'll just put a market order and the order will be executed right at the top of the green candle. The slight reversal candle which comes in, that'll take away a stop loss, and then you're pretty screwed. So let me just try to draw this if I can. This is pretty common. So markets in a range, you expect the markets to go upwards, right? Now the candle starts off and immediately shoots up till here. So you wanted to go long all throughout. However, once the big move has started, that's when you want to enter. So your limit order was probably placed somewhere around here. It didn't get executed, so the market immediately shot up. Now it's somewhere around this level, and you try to place a limit order here, but the market has again moved up. So getting frustrated, eventually what happens is you place a market order and it gets executed right at the top. And then the market has a small retracement. Your stop loss is somewhere around here. Your stop loss gets triggered, and then the up move continues, right? So this is what we're seeing. We're seeing the market being flat, not really much movement. You expect it to go long, but the up move is too much. You enter at the wrong time, the retracement takes out your stop loss, and then the trade performs perfectly. So in this case, it's very important to analyze what exactly you want. If you have missed out on a trade, if the market has already moved up significantly, wait for a retracement to enter a trend. You can't enter it just at any random time, because this is a very big possibility. So even if the market is just moving upwards, you can have retracements, or you will have retracements, which might take out a stop loss, and then the trade will perform. So this is how the market does tend to move, right? With depressions and then the uptrends. So if you miss out, if you aren't able to enter here or somewhere around this level, then leave the trade. Let the markets do whatever it has to. Now, it can even happen, this happens, a very, very big up move. You wanted to enter somewhere here, but you've missed out. It's fine. Don't think too much about the opportunity cost. You will have a retracement. And then while the retracement is going on, keep looking at entry points. Wait to see if, this is just a regular retracement or if the trend has truly changed, and try to enter long on the next one, right? Don't get stuck trying to ensure that you will make money or something of that sort. So you don't have to keep chasing the trade. That's a big mistake. uh, okay, I hope that's fine. If you have any questions, if you want me to repeat anything, just ask in the live chat, and I'll make sure you understand. Okay, everyone advises a beginner trader to start small. If you buy the premium paid, maybe small or big, on selling an option, a margin close to 1 lakh is required, even on one lot, which is not a small amount. So I wanted to ask, how can one start small in trading options with respect to index options, not stocks? Now, the key here is to go for cover orders, especially for trading intraday. Choose the MIS option, and apart from that, always choose cover orders. What that will do is it will bring the margins down significantly. So selling one lot of Nifty is around 20K using MIS and CO. And if you're doing the same thing with Bank Nifty, the charge is only around 14K. So anyway, you should have at least 30, 40K to, even attempt options trading in the indexes. Because otherwise, if you have an account size smaller than that, it's a very high likelihood that one big mistake can wipe out everything, which is not a risk that anybody should take. So again, use MIS, use cover orders, try intraday first. Once you get a hang of it, once you are consistently making money, then you can start to do something else. But for your question, yes, start small. Doesn't matter how much money you have, be it 10 lakh or 10 CR, start off with one lot. Make sure you are consistently profitable over a certain period of time with that one lot, and then try to increase. Trade with a system, always follow your trading system. You won't be successful without a trading system in place. What is the system? How does one create it? Where to start? Okay, so a trading system is a strategy that every trader follows. Now, the reason why nobody exactly tells you what it is because it's very individual for each person at the end of the day. I mean, I can give you the example of cricket. It's very simple. Take the bat, hit the ball, right? But the way to go about it will differ from person to person. There's no one size fits all. However, there are some fundamental rules, just like with cricket, that a person will have to follow. For example, risk management. So, risk management basically ensures that okay, first of all, you should know what your probability rate is or what your success rate is. If you are successful in say 50% of your trades, then even if your stop loss and your target as a ratio of 1 is to 1, that still won't be good enough for you, because brokerage will take away your money. You'll still be at a loss. So if you're successful in 50% of your trades, your stop loss will have to be smaller as compared to your target. So you have a ratio of more than 1 is to 1, which is the only way to make money. Otherwise, you'll have to be, if your ratio is 1 is to 1, stop loss and target. What I mean by this is, suppose you have a 50-point stop loss and your target is also 50 points. If you keep doing this at a 50% probability, at a 50% success rate, you will lose money just mathematically. Okay, so your strategy can be whatever works for you. Now, strategies can include what I do. I try to enter trades where my stop loss and target have a risk to reward ratio of at least 1 is to 1.5. That's the goal. And so that way, what happens is even if I'm right in just 40% of my trades, I will still have made enough money for the month. Okay, so my entire goal is to be right on more than 40% of my trades in a month, and I will end that month in green. So even if most of my trades, more than 50%, are in a loss, it doesn't really matter just because my risk to reward system ensures that mathematically I have a shot. So this is my system. My system is, again, I only intraday sell options mainly because that's what works for me. However, you have multiple traders who do different things. For example, you have people who exclusively buy options. Now, according to me, buying options is extremely difficult. But what these guys try to do is they try to predict big moves. So as we know with options, with their prices reward momentum. Correct. So if you can capture a big move, your option price can move very quickly. The percentage move in an option price can be extremely high. Now, what other people tend to do is they tend to take swing options, or you have some traders which are expiry traders. So every Thursday, maybe a couple of days before Thursday, they'll sell. If Nifty is at 10,000 or something, they might just sell 9,800 or something, or 9,500 3 or 4 days ago when the option price has some value. And over the next 2 or 3 days, they don't expect like a big move in their direction. So they will just eat up all the profits. Now that is another system. It depends on what you are comfortable with. Some people like to trade stocks because according to them, stocks are slightly more predictable as compared to the indexes. It depends on a person. So you'll have to figure it out for yourself what works best for your mentality. Now, what some traders do is they go for big moves. Okay, so I think you guys must have seen some of ISB God's screenshots. The thing with him is whenever he wins big. He has like 100-point moves. So even if he has 3 consecutive trades in which his stop loss is hit, he will still end up making money. Right? So there are many traders who follow systems like this. Maybe they can have 8 losses in a row, but as long as one trade works out for them, they'll be fine. Now, why I don't follow that is because it doesn't fit my personality. I can't really bear losing for 8 consecutive trades in a row. I don't have the discipline to hold on and still follow my system after 8 consecutive losses. So you have to figure out what works best for yourself. How to select stocks for swing trading? Now, again, everything as I've described is very different. It will depend on person to person. I can recommend one thing which Lumia Man does. So Lumia Man is one of our mentors in the mentorship program. So his system of for swing trading is pretty simple. What he will look at is the stocks which are around their all-time highs or the 52-week highs. So basically, stocks which have a lot of momentum right behind them. So what he'll do then is he'll wait for a retracement in those stocks which were at all-time highs, let them reach an important support level, compare compare it to what the general market conditions are, and then long that stock. Since he knows there's already a lot of momentum, there is a high chance of the down move just being a retracement. So he can go long somewhere on an important support level, and if his trades work out, they usually have an amazing risk to reward ratio as well. And his probability of success is extremely high, over 60-70%. I mean, that guy is an amazing trader. So that is one swing trading system that you can follow. Another system which I know of is what people do is they look at the sector which has been performing the best. Again, this is a momentum based strategy. Suppose IT has had a brilliant month, okay? They might just go long on the best performing stock. So even if it's a bubble or it could be anything, just because the stock has so much momentum, anytime the stock falls down, if you buy, there are chances that people won't let the stock fall down too much. We are seeing a similar sort of thing in Reliance. So Reliance it dropped down to 800 bucks or something, 900 bucks as well during the crash, but then it has been steadily recovering. It touched 2000, and ever since it touched 2000, people have been expecting a small retracement. And retracements have happened. There have been significant down moves. But the problem has been each time Reliance has fallen, there have been people willing to just buy it like crazy. So nobody is letting that stock fall. So despite there being fundamental news every day, which is now pumping the price up, it's investor sentiment. Everybody wants to buy a piece of Reliance. Even if the stock price falls by like 200 rupees, people will just look at it at a better price and just buy. So that could be another strategy for selecting stocks for swing trading. Right? Again, you have multiple options. You can look at our wiki. In our wiki, we have access to multiple books as well, multiple posts. You can go through them and then you'll have loads more idea. How do you scale up? What do you when you had a first major loss? Now scaling up can be done. There are two things before you get there. One is you have to be profitable, obviously, to have profits, and second, you have to be consistent. You can't just have profits for 3 months out of a year and then really do great things with it. You have to be consistently profitable, even if your returns aren't that high. Now, as far as scaling up goes, you have two different options. One thing which some traders do is they maintain like a fixed trading account size. So, for example, it could just be for a trader with a net worth of around, say, 50 lakhs. He could have a trading account size of 5 lakh stops. And what this guy can do is every time at the end of a month, suppose he was trading with 5 lakh rupees and then it became 6 lakh. So that 1 lakh is the money which he'll take out either for personal expenses or to grow his portfolio. So every month, whatever money he makes from that 5 lakh just gets added on to his portfolio. So that is the way he is using his trading money to enlarge his investment account. So he's continuously buying shares in shares or equities or bonds or cryptocurrency or whatever he has to. Right? So that is one way where your account can just steadily keep growing. Another way, which is slightly riskier, is to increase the number of lots in a trading account. The reason why I say it's slightly riskier, so for example, in your first month you had 30K. Okay, after 3 months time, you've made some profits and now you've made 30 more K, which isn't that hard, right? So in 3 months time you now have a total capital of 60K. So now using MIS, you can probably go and trade with 4 or 5 lots in Bank Nifty. So earlier you were trading with 1 lot, now you're trading with 5. You can steadily keep increasing the slot size, go from 1 to 2, then 2 to 3, then 3 to 4, and so on. Now, everything else remains the same because in Nifty and Bank Nifty and the indices, you have enough volume. So even if you're trading with like 500 lots or 1,000 lots, it's not going to affect anything. There won't be any slippage or anything. So in theory, it should be easy to scale up that way. However, the emotional aspect is again which does kill you. So every time you do scale up, your mind knows that there is more money riding here. So it will trick you into exiting your positions early or holding on to your losses for far too long. So when you are scaling up, be very well aware of the mental aspects that your mind will try to play games and to keep that under control. When you have a first major loss, don't do what I did and keep over trading. I mean, this is something I've had to learn the hard way. So after most major losses, what has happened is I've gone again, traded with like higher lot sizes, held on trades for longer, and then lost even more money. Otherwise, the other stupid thing I've done is go read some book or watch some YouTube video, get some new idea or some new strategy or some new indicator, try that out, and then lose money. So, most of that doesn't really work. You have to be in the right mental space before you can start trading again. So, take as long as you want. It could be a day, it could be 2 days, it could be a week, it could even be as long as a month after a particularly bad loss. But always keep a deadline in mind. Make sure you come back to trading. Otherwise, it's very easy to just think of, okay, the market's pretty bad. I'm making X amount of money elsewhere. Let's just stick to that. Yeah. When should someone consider scaling based on the capital or the confidence and learning? Obviously, it's a factor of everything, right? Everything does matter. Your confidence or your mentality is extremely important. Your capital has to grow before you consider scaling. So, especially with trading, I don't really think it makes sense to add in money. Even if you are pretty rich, even a trading account size of 10 lakh rupees is quite a lot to do whatever you want. Anything else, and you're probably taking a lot of risk because trading anybody can have a bad month and lose a lot of money. So as retail traders, I think it's best to be patient and just use compounding to grow your account size. The capital has to grow. There's no real point putting in money. So once you are seeing the actual results that the market is rewarding your point of view and giving you points and giving you money, that's when you increase your lot size. And even then, you have to be sure that it won't affect you at all. Whether you're trading with whether you were trading last month with 5, if 10 lots is scaring you, start off with 6 or go to 7. Don't go all the way to 10. Don't max out your account. Be where you are most comfortable with and slowly increase. Do you think it's a good time to make long term investments or just put money in trenches? Yeah, you can do either. Again, it depends on you. It depends on how what your risk profile is like and what your market outlook is. So if you do expect a correction in the market, maybe you expect Nifty to fall down to maybe 10,500 or 10,800 or something, maybe you're expecting a second wave. In that case, it would make sense to maybe put in 20% now and have 80% left over to invest every 500 points on the way down or up. Otherwise, if you want to be very safe, I think just have three tranches. Invest now, wait for the market to move up by 500 points in either direction, and then invest again. So that could be reason. So maybe invest at 11,500, 12,000, 12,500, something of that sort. Should I put my money in SIP or buy myself? Uh, According to me, I think it's best to do a little bit of both. So you can have SIPs in small cases in mutual funds or anything where you are not actively managing the money. So at least you have some assurance that these guys will probably make some money for you. Most mutual fund houses, for example, they will generate around 10 to 14 or 15% annually. And that is with almost nothing done from your side. So if you have 50K and you aren't that confident about investing in equities, but you do want to start, what you can do is 80% of your savings every month can go towards these fixed mutual funds. And 20% you can keep with yourself and invest it on your own in companies that you see fit. What you can do at the end of a year or something is, or whatever, periodically is compare the performance. Now, suppose you have 80% in a mutual fund and 20% is what you are investing directly. The mutual fund at the end of 6 months has given you, say, 10% returns, whereas your portfolio has given you 30% returns. I think that's a pretty clear indication of what you should do. You can probably rebalance your portfolio now. Reduce your SIP in the mutual funds to 50% and give the remaining 50% to yourself to invest. And you can do vice versa as well. If you see that you are losing a lot of money or not performing as well as your mutual fund, you can inverse the relationship. You can invest more in mutual funds. So there's multiple things you can play around with. The main thing is you have to be confident what you're doing. SIP good for long term, or do you suggest some other instrument? For extremely long term outlooks, since you've mentioned 15 years, I would prefer to pick stocks and I would prefer to go for a company which has consistently compounded money for at least the past 20 years. There's a great book on this by Saurabh Mukherjee. Uh, the Unusual Billionaires is the name of the book. You can just download it online or find it on Amazon. So that book is pretty great in the sense that it talks about how there are a few companies in India which have been giving you 20% CAGR annually for the past 20 years straight. So companies like Asian Paints, HUL, I think, uh, NIT Tech, and there were a few others as well. Bajaj Finance was there based on its recent performance. So some of these companies have really, really great track records, and you can invest in them for the long term. Do you think gold is a good investment? I have a personal bias against gold. I don't recommend anybody trade gold just because of the same notion that it doesn't really produce anything of value. However, people have made money on gold, and that's up to them. Okay, next question. I'm using Heiken Ashi candles, helps me in better understanding a chart. Where to put my stop loss? So I have used Heiken Ashi candles in the past, but again they are pretty weird. Okay. Let me just see if I can show it to you here. So, so this is the last day for Nifty, right? And Heiken Ashi candles. The problem with these candles is they can sometimes give you extremely late signals. So whenever you see a decent move, it could be very late, and sometimes it can be wrong as well. So something like this is a good indication that the trend has now changed and that you might go long. However, you have a stop loss situation here. Same thing happens here again, and sometimes the buy signals are way too late. So there's a buy signal here, there's a buy signal here, there's a buy signal here. So the third time it works. But then, so with Heiken Ashi candles, it's just very late. It isn't accurate. So I think regular candles are a much better variant. And where you put your stop loss is stop loss. So yeah, so for example, if this is the move and you want to go long somewhere on this line, so the market opened up here, moved upwards, pushed downwards, you already know that the opening price does act as a support line. The market bounces up from there, you want to go long. Where should your stop loss be? Your short stop loss should be slightly below the previous low point. Don't keep it exactly there because there's a high chance of that being triggered. Keep it slightly lower. Again, it should all fit within your risk to reward ratio. So if you are entering the trade at somewhere here, say 22430, your stop loss has to be at 22364. If that is too big of a risk for you, then you've already missed your entry. So you have to adjust accordingly. So I think it's best to just stick with regular charts and try to trade there. Uh, it hits stop loss but reverses from that very point. Again, this is related to your entries being wrong. Correct? So as I just explained, maybe in this case your stop loss is right below is touching that line. Maybe that's why you're getting it wrong. Or maybe you're entering too early. So maybe you exit somewhere at this candle, when the market is falling down because you expect the market to bounce upwards, but you're pretty eager. However, in the next candle, this big wick takes you out, your stop loss gets triggered, and then the trade performs. So what I was saying is maybe if you're entering too early, that could be a problem. If you're entering at the wrong time, maybe you're entering somewhere around here, but your stop loss is not below the lows. So maybe the next candle can trigger your stop loss and then the trade will perform. So both of these things could be factors. I have a separate video out on where to place stop losses and everything. Maybe check it out. Maybe that will give you a better idea. I think traditional candles are just better at this point. Also, sometimes the trade will hit your stop loss. You have to trust the system at that point. You should know for a fact that if you stick with your theory over a certain period of time or a certain number of trades, you will make money. I usually lose big and gain small. How to improve my gains? Yes, this is pretty common. Again, have a really fixed risk to reward ratio. I cannot stress on how important that is. If your stop loss is at 30 points whenever you enter a trade and you exit whenever you feel scared, note down what you're doing. So you might be entering trades, your stop loss is 30 points away, but you are happy with exiting at 20 points. So even if you have multiple trades of 20 points of profit, so suppose you have 3 good trades, you have 5 trades in a day, 3 good ones, 2 bad ones. What will happen is those 3 trades have gotten you 20 points each, which is 60 points, but those 2 bad trades have cost you 60 points. And along with brokerage, you're now in a loss. So you have to let your winners run. Especially, so this is why I always recommend trading with the trend. What will happen? So let's just see. Maybe I can. 1 second. Maybe I can find a chart for a trending day. Okay, so let's just take this random chart as an example. Suppose the market opens up, it falls down somewhere around here. However, it starts going up, and you enter your position. Now since you're trading with the trend, there's a high chance of a pump coming. Again, the market starts falling, but since you're trading with the trend, you can have the confidence to hold on that maybe, the market will keep going upwards. So if you're trading with the trend, you have multiple chances of winning big. However, if you shorted the market at any point of time, suppose you shorted the market right at the top, which is almost impossible to do, but suppose you're a genius. However, even then, you will have to exit on that exact same candle to make any amount of money, because if you wait, the pump will take out your stop loss. So always trade with the trend if you want to ensure that you can let your trade run for a while. So this is the problem with reversals. Don't trade for reversals. Don't aim for reversals. Yeah. Hopefully this is clear. The best broker for long-term investment. For investments, you don't really need a full-time broker. So I would suggest opting for any decent discount broker. Zerodha, I've been sticking with Zerodha for a while, so that's just what I recommend. How to begin option trading? What options do I choose when deciding to trade for a day or positional trade? I think you shouldn't really mix the two. You can either stick with intraday for a while or stick with positional for a while, especially as a beginner. So you don't have too much to think about. just stick to one style. And how do you start off? I think Zerodha Varsity is pretty amazing. It covers most of the theory points, so you'll know what the Greeks are, what alpha is, gamma is, theta is, vega is, how they affect the option pricing, and then you have to start paper trading or actually trading. There is no other way. You can read as much as you want about options trading, but eventually, especially intraday, it does depend almost entirely on experience. Because even with paper trading, you don't have the same emotions. What options do I choose when trading to trade for a day? While in intraday trades, I would recommend trading at the money strikes, mainly because, for example, in Nifty, every strike is 100 points away. Now, 100 points itself is a pretty big move. So, being able to estimate there will be a bigger move which will become in the money and that will give you more profits, that is pretty wishful thinking because it's pretty rare for a 200 move, for you to capture 200-point move consistently. Correct? So I would just say stick with at the money trading. However, when you are paper trading, look at your trading strategy, look at your trading style. Maybe you're the kind of person who has like 100-point stop losses, but always takes profits after 100 points. That could be very profitable for you as well. So if you are that kind of trader, maybe make your own adjustments, backtest everything, and come back with a strategy that is at least mathematically sound. Yeah. How do you know when to exit a condor? Is it easy to scale up by just buying more lots? What should I be looking out for? Uh, there is nothing easy in trading. Even if you're doing what we call at ISB uncle trades something, it's still not easy to make money. What I mean by uncle trades is suppose Nifty is currently at 11,500. Today is expiry day, and you might just sell a 12,000 strike. Now there's almost a 0% chance of the market going all the way to 12,000, right? So that is what we call an uncle trade. That is a trade which will probably be worth around 5-6 rupees. You can keep selling that option consistently and make small profits each time. In theory, it seems very easy to scale up. However, black swan events do occur. So what might just end up happening is you can have 20 consecutive months where every single day you try the same strategy and you make some money. However, that one day when your option actually does get exercised and becomes in the money, you will lose a major chunk of your profits. So most option strategists, especially beginner ones, there's this famous expression: they eat like an ant, but they shit like an elephant. So it's not as easy to just scale up by buying more lots. You should know price action. You have to understand what the market is telling you. Without it, there's no point. Okay. I started buying stocks in small quantity but in regular intervals. I'm planning some investment for 10 to 15 years. Do I need to set a stop loss for investing for the long term? No, there is no real need to have a stop loss if you're investing for the long term. What you do have to monitor is the fundamental news of the company. So look at a company, study it properly. Once you understand exactly what the company does, look at what its major advantages are, how the company can keep growing in the future, how it'll cope with different market conditions, how it'll cope with new competitors coming in or other people slashing prices. But once the research is done and you are sure about a company, you can just invest and not have a stop loss. If the market is falling down that quickly, then there has to be something fundamental pushing the price downwards. Otherwise, usual normal dips, you can just use that as opportunity to just buy more, as long as the fundamentals haven't changed. How to identify stocks for intraday trading? Again, this is very individual. It depends on your strategy. So if you are intraday trading stocks, one easy thing could be not easy, sorry. One strategy could be to just go look at the sector which is the strongest during that particular day and try to identify retracements or important support levels at those particular stocks and then try to go with the trend. That is something which could work. However, please don't lose money this way. Always backtest everything. Concept of ETFs in the Indian markets. I think ETFs remain the same whether in the Indian markets or abroad. They are just a basket, correct? The difference between ETFs and mutual funds is that mutual funds can be actively managed, and hence their exit loads, their advance payments, and everything their charges can be higher. ETFs usually just track an index or they track a basket of stocks, so there's very little active management going on. So they're pretty passive and they're usually cheaper. So it's just an easier way. If you want to invest in Nifty, you can always just buy Nifty ETFs and stuff. It's fine. Index funds, index funds are great, man. How can one trade and invest with low capital like 3 to 5k, 8 to 10k, 15 20k? You can't trade with capitals that low. You need at least 30 to 40k for trading because even with cover orders and stuff, one lot still comes up to 13k for Bank Nifty and 20k for Nifty. So, and obviously you have to trade Nifty some days, you have to trade Bank Nifty some days. You can't just have a 15k options account size. What instruments can be used to trade and invest? uh, Once you have 30k, then you can invest in pretty much anything. What types of risk management to follow? Again, I think I've spoken about risk management already. Uh, Make sure your targets and your stop losses are proper. Make sure that your system works, and make sure there are mathematical reasons for why you should make money. What instruments can be used to trade and invest? Do whatever you think fits you. If you can identify USD INR more properly as compared to Nifty, then trade that. If you think stocks are easier, then trade that. Do whatever you see fit. There is no one size fits all. Should I invest in healthcare sector mutual funds as currently a booming sector? I looked at some healthcare mutual funds, they were up 70%, some of them are up 35%. So what you're basically hoping for is to buy high and hope to sell even higher. Now, while that is a decent strategy, right now what I would recommend is just invest in equities directly, especially something if you see is fundamentally undervalued. I think those can be really great investments right now. Should I invest in PSU shares now as the prices are down? No. I'm sure you must have seen loads of memes about PSU companies here on Indian Street Bets, and the reason is they aren't properly managed. So, since they aren't properly managed, you do have multiple problems. For example, SBI, I've given this example in another comment as well. If this company was run by someone like Aditya Puri, I'm sure it would be the biggest bank in India by far. However, it just isn't run right. This is the problem with PSU companies. Now, another thing to keep in mind is don't have this mentality of. So, we've currently been in a significant bull market starting all the way from 7,500. And if, despite all these headwinds, these stocks still haven't been able to go up, there must be something really wrong with them. 3, should I buy more ITC shares at this low price? Again, ITC is, according to me, ITC is a good company. I've written an entire DD on this topic explaining all the different products they have, what their problems are. Their major problems remain one, that they are overly dependent on the tobacco industry. Despite what they show, most of their profits after tax, over 60 or 70%, I forgot the exact number now, but it's there in the DD. Over 60 to 70% of the PAT comes from the tobacco sector. So that is extremely dependent. And the other problem with this sector is the government can significantly affect their profitability. So, for example, the government can come out tomorrow and say that cigarettes are now 100% more expensive or 100% tax on cigarettes, and these guys won't be able to do anything. So, they don't exactly control their pricing, correct? Since the government can influence their entire behavior. So, this is why ITC's shares are falling. These are the two major problems with it. However, if you have fundamentally gone through the company and think that they have a bright future, go ahead and invest. It's fine. But be aware that it can keep falling down, and you might just have to hold on. The HUL example is also something which is thrown around a lot. For 10 years, HUL gave, I think, like 10% returns, not annually, altogether in 10 years. However, in the 5 years after that, the company grew so much that over the entire 15-year period, your CAGR was again over 20%, making it an amazing investment. Same thing with Reliance. Reliance was hovering around 400, 500 for ages. Nobody cared. Now that there's a pump, it's gone all the way up to 2,200. So patience is very important when you're investing. Wipro, Infosys, TCS shares a high price right now. Should I buy them? IT companies, IT companies all have their own issues, especially with quality. I'm not too certain about what the future holds for the IT sector, especially in India. Maybe because of more people working at home, it could have negative effects. And TCS is still extremely over dependent on Europe and what Europe does. So I'll probably wait and see how the world is after the pandemic is done, and then think about IT shares. I'm not buying anything right now. Equity related query, stock selection from intraday. Again, have repeated this multiple times. It depends on your trading style. If a trade goes your way, how to calculate when to move profits. Most of the time 1 is to 2 is rewarding, but the stock makes big move after closing position. Okay. Yeah, again, 1 is to 2 ratio is amazing, but always exit your position based on price action. Look at what the price is telling you. So just to give you an example, once you see, one very simple thing which you can do is, if you are trading with the trend, now you have one big green candle, second, third, fourth, fifth. So what is your, where did your, for this move, where was your last big green candle? The last move started somewhere from here, right? Once this entire thing has been broken down, that's when you can always exit your position, because then the trend has properly changed. So for example, if now there's been a significant up move, you long the market right at this level. Market has gone all the way up. This is the last big green candle. If this has been broken down, exit your position. So look at market. So look at the markets. Look at what the price is telling you and exit accordingly. However, if you are content with how many points you have, please exit. There's no point going after bigger moves when you aren't sure about what the markets can do. Eventually, don't think so much about the opportunity. Just make sure you are consistently profitable. It doesn't matter if you missed out on a 500-point move. I mean, we miss out on 500-point moves every single day. So it shouldn't bother you. Just all that matters is how much money you made. That's it. Tips on growing a small account: be profitable, don't make big mistakes, don't stray from your rules. I've seen too many people with small accounts who've been doing very well. They've made money for 3 consecutive months. And then what happens is they get extremely overconfident. They have this one trade without a stop loss, and that trade just wipes away 3 months of profits or 2 months of profits. And then they're all depressed and they can't really trade properly because the mind has been rightfully affected. So don't you have to be very disciplined to make money, especially with a smaller account. Uh, Rate of change in OI, I don't think that's very important. Maybe I don't know enough about it to say, so I'll just not comment. Chalo, these are all the questions that came on Reddit. Uh, I can see there are a few questions in the live chat as well. I'll just take a small break. We'll come back and then I'll read the chat and then try to answer all your questions. Thanks. 5 minutes, yeah. Okay, let's just get to the questions. What sources can you use? You can just check out the wiki on the subreddit. We have everything linked out. I have slideshows on the basics, starting from what an index option is, what an ETF is, what a mutual fund is, to we have other posts on what the RBI does, all the various things it does. So I think the wiki is a pretty good place. Zerodha Varsity is also a really good place to start. A good amount, you need at least 30K. That's like the absolute minimum. What happens on options expiry date? So if it's a weekly options expiry, all the options for that week, some of them will close at zero. So that's what we're looking at, right? Especially as an option seller intraday, that is very important for me since that gives me the highest chance of making money. How to choose stocks? Again, we've spoken about that. What is MIS and cover orders? If you don't know what they are, you can probably search for them on YouTube. You'll find multiple videos. Fundamental analysis webinar whenever you guys want. Just let me know on Reddit. If enough people vote for it, I'll make something on fundamental analysis. I don't mind. Entering based on closed candles versus open candles. Yes, I did speak about it. I think if you are looking at 1 minute candles, then you will have too much volatility. There'll be too much noise to make anything. Look for higher time frames. Look at 5 minute time frames and trade with the trend. That'll be much better. How does someone exercise their option? So by exercising an option, what I meant is either this happens in stocks because in indexes in the indexes they're all cash settled. So in options, what can happen is if the option falls in the money, then you might just be forced to buy shares. Right? So you can just Google this, you'll figure it out. Black swan events could wipe off month's gains. Wouldn't be the same for intraday ATM traders, say if they both have a strict stop loss. I mean, intraday at the money traders, if you have a stop loss, how will a black swan event wipe you out? Correct? Since even if there's a big move downwards, you have a stop loss, that'll get triggered, nothing else. Okay, so I guess that's it for today. Thank you for attending, and if you have any further questions, you can always reach us. Thank you.